to our daily Facebook live stream. It is Wednesday, the 10th of June. Great happy birthday to my sister-in-law, Mariana Bucksath. Mazzy, hope you have a fantastic day today. So happy birthday to you. And delightful to see everybody this morning. So for those who don't know me, my name is Bronwyn Pearson. I'm from Pinnacle People Solutions, and as I said, welcome to our daily Facebook Live update. We've been doing this, I think this is now our 14th week since COVID hit. We made the decision that the best thing that we thought we could do to support our regionally based businesses and communities was to get up here at 9:15 every weekday morning and provide updates on new information as it relates to business owners and their staff, as well as more detailed information about topics relating to staffing and business management, because obviously the landscape has been shifting significantly over the last 14 weeks. Literally from one day to the next, we can have significant changes and clarifications coming out. So our intention is to distill those for you, make sense of them hopefully, and we're very open to suggestions for topics and areas that our clients and our communities are keen to learn more about. So a lot of the topics that we choose are informed by that feedback. So don't hesitate, please, to get in touch with us and ask us if there's particular areas that you'd like us to cover off. Good morning, Jess. And welcome to, as I said, those who have become regulars with us in the last 14 weeks and those of you who are new. So don't be worried if you can't get to the 9:15 live stream each morning, because they are recorded and they are available afterwards up in Facebook and also on our YouTube channel, in LinkedIn, and also on our website together with a fact sheet for each presentation. So you've got lots of resources there that you can draw on. So please ask us any questions that you might have as we go along. They'll appear, if you just want to use the chat screen, you can pop them up there, and I will keep an eye on that and answer whatever I can. If I need to take it on notice, I'll do my best to answer at the time, but if I do need to take a little bit of time to think about it or get some more information, I'll do that overnight and come back to you tomorrow morning with the answer. Outside of this, of course, you can contact either myself or my phenomenal team anytime via Facebook. You can private message us. You can email, telephone, Facebook, website, YouTube, LinkedIn, the whole gamut. So I'm sure our team are going to put up those contact details for you in the chat screen in just a moment. There they go. Fantastic. So feel free to use those. You're more than welcome to get in touch with us and have an obligation-free conversation about your business and the things worrying you, and how we can work out whether and how we might be able to help. Okay, so yesterday we had the wonderful Jessica giving us some tips and strategies on managing conflict in the work environment, which we're really appreciative of, because there is a bit more of that happening at the moment, just with the uncertainty and dispersed teams and people coming back or not coming back, and businesses reopening partially and trying to work out what they can do, etc. So, you know, it's a really tricky time. And so we recognize that, and it was good to have Jess up yesterday talking us through some strategies to manage that. So last time I saw you was last Friday, the 5th of June. I hope you all had a wonderful long weekend, or certainly if you're in a state that has the Queen's Birthday long weekend on this particular weekend. So hope you had a great long weekend. Just a reminder that the New South Wales state government grants, the $10,000 grants for businesses impacted significantly by COVID, have been extended to the 30th of June. The initial date was the 31st of May, but that has been extended. So we're now the 10th of June. You've got a little bit more time, but get up there and have a look, because there's every chance you'll qualify. So get up there and have a look at that. We have had changes to JobKeeper that have been announced since last Friday by the Treasurer. And that is, as it particularly applies to this point in time, to the childcare sector. But it's really important to remember that under the legislation and the regulations that apply to JobKeeper, that the Treasurer reserves the right to make changes to the scheme. And where, if you look at the fine print, and again, the devil's always in the detail when it comes to employment law and these and associated um, projects and things like the temporary changes to the Fair Work Act and the wage subsidy, etc. An entitlement to the JobKeeper payment may be cancelled, revoked, terminated, varied, or made subject to conditions by or under later legislation. So there's the catch-all for they can change anything they want to between now and when the program is due to finish on the 27th of September. So let me go through what the changes mean for the childcare centre, bearing in mind that the Treasurer has not ruled out further changes to JobKeeper. In fact, it's slated for review in July, and the scheme is obviously due to end in September, on the 27th of September, but it will no longer apply to childcare workers from July. That's been the latest announcement in respect of childcare, the childcare industry, but also in particular for JobKeeper. There's a lot of noise in the sort of sphere of economics, particularly at the moment, that there is a case for extending JobKeeper for some businesses and their workers. We don't know whether that's going to happen or not, but what we do know is that the first changes to the scheme have been announced as they apply to the childcare industry, and we can expect further changes to be forthcoming. So what we do know is that it's likely that a number of businesses would also see payments cut off early for JobKeeper. Others might be fortunate enough to see extensions beyond September, but this is all a consequence of the fact that the economy has reopened sooner than was expected, and as a consequence of the rate of infection and death has fallen short so far in terms of coronavirus, which is fantastic in terms of the initial projections. We all who are eligible for JobKeeper do need to self-report to the ATO at the end of every month in terms of what our projected income is for the next month. It's possible that could be tracked more closely, and a determination based on that as to whether or not that business should continue to receive JobKeeper payments. Now, that hasn't happened yet. I'm flagging that as a potential. So what we've seen happen in terms of the changes to the childcare sector is that on Monday, so on the public holiday Monday, a couple of days ago, Federal Education Minister Dan Tehan announced that the pay would end from July 20 for employees of childcare providers. So that's for the JobKeeper scheme. Instead of JobKeeper, the government will allocate $708 million to pay childcare services a transition payment of 25% of their fee revenue from the 13th of July until the 27th of September, 27th of September being the date that JobKeeper is due to conclude. But childcare providers will need to meet certain conditions to qualify for the transition payment. If you are a childcare provider and you want more information about how this is going to impact you directly, get in touch with us and we'll walk you through it. For those of you who access childcare or have loved ones or colleagues who access childcare, the childcare fee-free period that was introduced during COVID is also due to end on the 12th of July. The government at that date will reintroduce the childcare subsidy at the same time as ending JobKeeper for childcare workers. And under the changes, parents will go back to paying for their children's care with the reintroduction, as I said, of the childcare subsidy, but the government will loosen the criteria for subsidised care for families hit by COVID and the associated economic downturn. So the activity test will be eased until the 4th of October to support eligible families whose employment has been impacted as a consequence of COVID. And those families will receive up to 100 hours per fortnight of subsidised care during that period. The funding will also, the support package that childcare providers may be eligible for, this transition package following the end of JobKeeper for childcare workers, will also be contingent on childcare fees being capped at the level they were in late February. So as I said, if you're a childcare provider and you need more information, get in touch with us and we can walk you through it. Okay, so the other thing that has been announced for business owners are that the changes to the instant asset write-off, so the new rules that were introduced for the instant asset write-off scheme back in March will be extended to the end of this year, so the 31st of December. It means that eligible businesses are able to instantly deduct the cost of assets worth up to $150,000, depending on your revenue. And the intention is to give a further hand to businesses to help them recover from the coronavirus. So it was back in March that the federal government massively expanded the scope of the instant asset write-off scheme. And it changed to allowing businesses making $50 million a year, up to $50 million a year, to write off purchases up to $30,000. And to businesses making $500 million a year, being able to deduct purchases worth up to $150,000. So that was due to finish on the 1st of July. That will now go through until the 31st of December. So important to know for business owners. Okay, so that's our update since last Friday. Oh, the other thing, my apologies, that came through on my newsfeed this morning is that the New South Wales Acting Sports Minister Jeff Lee announced this morning on radio that there will be a return of community sport for all ages in New South Wales commencing on the 1st of July. That was to be the date for children's community sport to return, but this is going to be a return to community sport for all ages. So I'm going to get some more information on that and update you further tomorrow morning at tomorrow morning's live stream. But that's quite exciting to hear about for those who've been not able to do the sport you wanted to do. So 1 July. Is your return date, and I'll give you some more information once this is unpacked a bit further by the minister tomorrow morning on that. Okay, so our topic today is what are your employer obligations if you're buying or selling a business. So if you're selling yours, or you're thinking of selling yours, or you're looking at the prospect of buying a business from somebody else, then there are some fairly significant obligations that you have as the employer who might be the current employer looking to sell a business, or if you're looking to purchase one. So it's really important. We raised this a couple of times in the last couple of weeks in the context of other topics, and we were specifically requested to go through what this looks like. So absolutely very happy to do that. So thank you for the request. So what is a transfer of business? So essentially, buying or selling a business may be determined under the Fair Work Act to actually be a transfer of business. And what does that mean? So there are transfer of business provisions under the Fair Work Act, which is what we'll be basing our conversation on today. And it deals with situations where a business is transferred from one national system employer, for example, a company. So if you employ staff under the Fair Work Act, the National Employment Standards, and potentially one of the modern awards, if you are looking to transfer that business to be transferred from one national system employer to another, and the result may be that an award, so a modern award, an enterprise agreement, or another type of transferable instrument follows the transfer and becomes binding on the new employer and new owner of that business. So whenever an employer buys or sells a business, the sale may affect the employment and the entitlements of the employees already working for the business before the ownership was changed. So let me be really clear about that. The employment and entitlements of employees already working for a business that may be bought or sold can be significantly affected. And this is what we're talking about today. So what is determined then as a transfer of business? So under the Fair Work Act, a transfer of business is deemed to take place if the following requirements are satisfied. So the first is that the employment of an employee of the old employer has terminated. Within 3 months after the termination, the employee becomes employed by the new employer, so the new owner of the business. The work that the person performs for the new employer, so the transferring work, is the same or substantially similar to the work they performed for the old employer. And at least one of the following connections exists between the two employers. So an arrangement that the new employer owns or has some or all of the old employer's assets that relate to the transferring work. So if you buy a cafe, for example, and you buy it as an ongoing concern, and you take over all of the equipment, potentially the lease, any or all of those sorts of things, they would be considered to be assets. So at least one of the following needs to happen for there to be a connection to justify what's called a transfer of business. So that's where the new owner owns or has some or all of the old employer's assets. The work the employee does is outsourced by the old employer to the new employer. The work previously outsourced might be back being insourced. And they are associated entities within the meaning of the Corporations Act. There is no transfer of business for the purposes of the Fair Work Act unless at least one employee moves to the new employer and they are doing transferring work, which is the same or substantially similar to what they were doing under the previous owner / employer. So where there's been a transfer of business, certain workplace instruments, otherwise referred to in the Act as transferable instruments, that covered employees of the old employer continue to cover those staff employed by the new employer. And each of the following is a transferable instrument. So there could be an enterprise agreement that had previously been approved by the Fair Work Commission, a preserved individual or collective state agreement, an AWA, an individual, which is an Australian workplace agreement, an individual transitional employment agreement, a certified agreement made before the 27th of March 2006, or an old industrial relations agreement. So that is that's one lot of transferable instruments. The other is a workplace determination, so one that's been made by the Fair Work Commission. There might be a named employer award, so that's an award that covers one or more of the employees or one or more of the employers or specific classes of the employer. And that transferable instrument will cover a transferring employee while they're performing that appropriate work until it's terminated or until a new workplace instrument commences, which can cover the staff that are transferring to the new owner. Other arrangements that can also transfer, which is really important to bear in mind, are individual flexibility agreements and guarantees of annual earnings. So if either of those things exist with staff of a business that you're looking to buy, or where you have a business and you're looking to sell it and the new owner is potentially going to take your staff on, then these things all transfer with them. So that's incredibly important to remember. Any new employees that you engage will be covered under the applicable modern award or another enterprise agreement. If there is no modern award or enterprise agreement that covers the new staff, then the transferable instrument may also apply to the new employees. As I said, devil is always in the detail when it comes to these things. So word of advice, if you are looking to sell your business or you're potentially looking to buy a business or become a partner in a business, get in touch with us so that you clearly understand what your obligations are as a national system employer. And by national system employer, I mean an employer that's employing people under the Fair Work Act and the National Employment Standards. So one of the most obvious questions that arises from looking at this is what happens to employee entitlements on a transfer of business. So under the Fair Work Act, believe it or not, there's actually no obligation on you as the employer to notify your staff of a transfer of business or what workplace instrument will apply. However, you do have to give every new employee, if you bring on board a business and their staff, a copy of the Fair Work Information Statement before or as soon as possible after they start their new job with you, because that statement explains the effect of a transfer of business on their entitlements. Generally, this is really important to know, where there is a transfer of employment, service with the old employer counts as service with you as the new employer, or service that counted with you as the business you're selling will count as service to the new employer of your employees. However, as with all of this, there are exceptions to the principle. So when a new employer is not an associated entity of the old employer, so they're not connected in some lawful way, the new employer may decide, and this is important for you if you're considering buying a business particularly, you may decide not to recognise a transferring employee's previous accumulated service for the purposes of annual leave or redundancy pay under the National Employment Standards. The only way you can do that, though, is that you must give a letter to those staff to indicate that you won't be recognising service, because the default setting in the legislation is that you will be recognising service. So unless you explicitly state the alternative in writing to those individual staff members, then those recognition of service with their previous employer will continue with you. If the service isn't recognised, so if you put it in writing to the staff that you're going to be employing that their service with the old employer is not recognised, that means that the former employer or the existing employer before you complete the purchase may be under an obligation to pay the affected employees their accrued entitlements, so annual leave or redundancy. So it would be incredibly important in any sale contract terms to be very clear about the payment of staff entitlements, what they look like, who's paying, etc. Very, very important. If you take on board staff from an old employer, you've purchased a business, you decide you're going to employ the staff associated, or some of them associated with the business you've purchased. If they've already received entitlements based on service from their old employer, you don't have to count that service again in determining entitlements with you as the new employer. So, for example, if they were paid notice in lieu of termination that was given to them by their old employer, any period of notice for any subsequent termination that you might give them is not calculated based on service with the old employer, if that makes sense. So their service period starts from day dot when they started with you, if they've already been paid that out by and given appropriate notice by their old employer. Again, questions, queries, how it might impact you specifically, get in touch with us. Very happy to walk you through it. So one of the other big elements that we need to be reminded of in terms of either buying or selling a business is what happens to the employment records on a transfer of business. So not surprisingly, the Fair Work regulations provide the requirements and obligations of employers concerning records of transferring employees. Now, you already have record-keeping obligations as an employer. So anybody who employs staff has those record-keeping obligations, and I will go back through those in just a moment so that you're clear. You need to be keeping these records irrespective of whether you have an intention at the moment to sell your business or to buy another one. But if you're going to buy one, you need to make sure that the employer of that organisation has been keeping scrupulous records, because once they transfer to you, you've got an obligation to make sure that obligation transfers to you. So you need to make sure that you get everything that that the law says that business owner and employer needed to have been keeping. So the old employer is required to transfer the employment record for each transferring employee at the time the connection between the two employers occurs. So at the time that the transfer of assets occurs, so the sale occurs, when the work is outsourced or insourced, or for associated entities when the employee is transferred. So at that point, if the transferring employee becomes an employee of you or the new employer after the transfer, the new employer must ask the old employer to provide them with the employee's records. And the old employer must give those records to the new employer. So whether you're the old employer or the new employer, or potentially one or either, you need to be very clear that you are complying with your record keeping obligations to either hand them over, or you know what those obligations are on the old employer if they're handing them to you. You then need to keep those records for 7 years in line with your record keeping obligations under the Fair Work Act. And as I said, I'm going to review that again for you in just a moment. So as I said, the transfer of business happens where a business is moving from one national system employer to another. The intention is of a transfer of business provision is to ensure that all employees who follow the business or activity are deemed to be, their service is deemed to be unbroken, and the period of service the employee had with the previous business is deemed to be service with the new employer, and provision is made in the Fair Work Act to protect the accrued entitlements of employees during a transfer of business. You can, as the new employer, write to new staff and tell them that their service with the old employer does not count towards service with you, but if you intend for that to be the case, it needs to be lawful. You need to put it in writing. Otherwise, the default in the Fair Work Act is that service will transfer. There is a transfer of business under the Fair Work Act where one or more employees is terminated from the first employer, becomes employed by the second business within 3 months and does substantially similar work. And the work that they do for the new employer is substantially the same as that they did for the old employer. And there is a connection between the two employers. So associated entities are defined under the Corporations Act, defines an associated entity of another entity. So essentially what you've got is, if you've got a business company structure where you've got several companies under a trust umbrella or something like that, and you decide to move a business from one to the other, that's a transfer of business with associated entities. But there can be a transfer of business between non-associated entities. And the Fair Work Act is very clear that there is a connection between the old employer and the new employer if the new employer or associated entity owns or has the beneficial use of some or all of the assets, whether they're tangible or intangible, that the original entity owned and has the beneficial use, and that it relates to the work that the new business is doing. So essentially, if you bring across staff, intellectual property, equipment, any of those things, it's going to be considered, while it might be a non-associated entity, it's going to be considered transferable. If you're taking on board a new business, then the modern award covering the transferring employees at the first employer may cover the staff at the second employer, but not necessarily. So get advice in respect of that. An enterprise agreement, if that is deemed to be a transferable instrument from the originating employer, then that might apply to the staff that you take on board, even though it's not your enterprise agreement. So get advice about that. As I said, the default setting is that prior service with the first employer is counted for the amount of annual leave that's transferring with the employer. Now, it may be that you have a sale arrangement where annual leave is paid out by the former employer and all entitlements are paid out, and then you start from day dot with you as the new employer. But that's not assumed. You need to get all of that in writing, and you need to be absolutely clear what the old employer's obligations are to their staff, so that you can make sure that none of that transfers to you unless that's part of the agreement. So for the purposes of calculating service, the amount of notice of termination that the transferring employee is entitled to might be impacted in terms of from you as the second employer if it's not clarified with the first. You might have inherited service requirements when calculating eligibility for unpaid parental leave. For determining when the minimum employment period ends. Now, this becomes really important. So if you want to be able to have a probation period for new employees, you need to have written to them to advise that their service with the first employer doesn't count. Otherwise, you can't have a probation period because it's continued service. So It's incredibly important. I know this might be spinning some people's heads at this point in time, and I'm trying to work out how to explain it in a way that is less confusing and and provides more clarity. But this is a spider's web. So it is important, at the very least, that you take away from today that there are substantial obligations, that you could find that you inherit obligations you didn't know you were inheriting, or that you actually need to have things in place that you didn't know you needed to have in place before you sell your business. Today is importantly about making sure you understand that there are those things, and make sure that you get that information before you purchase anything, or before you as part of the process of preparing your business for sale, if that's what you're thinking you might do. Okay, so as I said before, incredibly importantly, recognition of service with the first employer does not apply with respect to annual leave or redundancy pay under the National Employment Standards, where the transfer is between non-associated entities, if the second employer decides not to recognise the service with the first employer. The second employer is not obliged to recognise prior service for either the minimum employment period, so probation period, provided that you advise the transferring staff in writing that prior service won't be recognised before they start employment with you. So, as I said, the default setting in the legislation is that service does count for the second and subsequent employers, but you can actually put that in writing and say it doesn't, and then have a probation period, have everything start from scratch with you, but you have to put that in writing before they start work with you. Okay, so as I said, the situation in respect of whether you're going to buy a business or whether you might be considering selling yours is, it's incredibly important to remember that you have very explicit record keeping obligations under the Fair Work Act. So if you're about to become, or you think you're going to become an employer by the virtue of buying a business, you need to make sure that the former employer did all of the things that they required to under law, so that the records that you then get are complete. And if you're looking to sell your business, you similarly need to make sure that you are maintaining all of the records that you're required to do so under the Fair Work Act. So you must keep time and attendance and wages records for 7 years. They need to be readily accessible to a Fair Work inspector, and there's plenty of those moving around the countryside at the moment. They need to be legible, and they need to be in English. And time and wages records cannot be changed unless the change is to correct an error, and they cannot be false or misleading. Our best practice tip, and certainly that also provided by the Fair Work Commission, is that employers should keep records of hours worked for all staff, including piece workers and including those on guarantees of annual earnings, because there's been recent case law around this. In fact, we might even throw that in as a topic next week. Adopting best practice record keeping makes it easier to keep track of your staff's details, identify payroll mistakes if those are made, and keep a business running efficiently. It also helps avoid fines for doing the wrong thing, and we've seen those more than we've had hot dinners, unfortunately. So what records do you need to keep, and what needs to be in them, essentially? You need to keep certain information for each employee. If your employee is paid an annual wage under an award, you are required to keep extra records for those staff. And we can give you further information about that. But in general terms, the records that you need to keep the general records include your name, the employer's name, and the employee's name, your ABN, if any, the commencement date of the staff member, whether they're full-time, part-time or casual, whether their employment is permanent or temporary. You need to keep records of the pay rate that you're paying to the staff member. Mind you, all these records you also need to have given to the staff member so they understand what their job is, who they're employed by, what their nature of engagement is, how many hours, what are their days, what award are they covered by, if they're covered by one, all of that. That needs to be given to them in a letter of engagement at the time that they started. We advise that you up that to an employment contract, and we can talk you through why and help you get those things in place. So you need to have records as to the pay rate you're paying to your staff, the gross and net amounts paid, any deductions from the gross amount, details of any incentive-based payments, bonuses, loadings, penalty rates, or other monetary allowances, or separately identifiable entitlement that you might be paying. You need to, in terms of hours of work, you need to keep details of any penalty rates or loadings paid to staff for overtime hours worked, including the number of overtime hours worked by a staff member during a particular day, and when the employee started and finished the overtime hours. You also need to keep the details of the hours an employee works. If they're a casual or they're an irregular part-time employee who's paid based on time worked. And you need to keep a copy of the written agreement if you and your staff member have agreed to an averaging of the staff member's work hours. You also need to keep records about leave, so any leave taken, how much leave an employee has. If the employee is able to cash out annual leave, you need to keep a copy of the agreement to cash out the amount of leave, a record of how much was paid, the amount of leave cashed out, and when the payment was made. If under an award you agree to an employee taking annual leave in advance, you also need to keep a copy of that agreement in writing, and it needs to state the amount of leave taken and the day the leave starts. You also need to keep records in respect of superannuation. So the amount paid, the pay period, the dates that you paid it, the name of the super fund, the reason that you paid into the fund. And if employers paid a defined benefit interest into a defined benefit fund, then you don't have to include these contributions in the record. You also need to keep records of individual flexibility agreements. So if you and your staff member agree to an individual flexibility agreement under an award or registered agreement, that record must include both a copy of the written agreement you came to, a copy of any notice or written agreement to terminate the flexibility agreement. So if you're going to buy a business, you want to make sure you get all these records from the old employer, including any flexibility agreements that may have existed but since expired. So all those records for the last 7 years for staff you may be employing as a new entity after you've purchased a business need to be provided to you. Records that you need to provide in terms of annual earnings is if you're going to give a guarantee of annual earnings to a staff member, you need to have in writing what the guarantee is and the record and the date the guarantee was cancelled, if that happened and where that's applicable. If you ended somebody's employment, you need to have records of how the employment was terminated, e.g. by agreement, summarily, or in some other way. You need to specify what those details were, the notice that was provided, and if so, how much, the name of the person who terminated the employment. So that will be incredibly important for staff that were terminated from the old employer and that you might be looking to re-engage. Where there's been a transfer of business, which is what we've been talking about this morning, the old employer has to give the new employer records of any transferring employees. The new employer also has to ask for employment records from the old employer for any transferring employee who becomes an employee within 3 months of the sale of the business. So whether you're selling and potentially becoming the ex-employer or you're buying and potentially becoming the new employer, you have significant record-keeping obligations. So you need to also remember that employee records are private and confidential. So only the employer, payroll staff, the employee themselves, and authorised individuals such as an accountant can access those records. If an employee asks to see their records, you must make them available by law. This includes after an employee has ceased employment. Fair Work inspectors can also ask for time and wages records to find out if an employee is entitled to find out what an employee is entitled to and whether they've been paid correctly. Okay, so the big looming question, what happens if records aren't kept? If records aren't kept or they're incorrect, Fair Work inspectors can give you a fine, which is called an infringement notice. It's unlawful for employers to make or keep employment records that they know are false or misleading. You can also be penalised if the Fair Work Commission decides to take a matter to court. In some cases, employers who haven't kept records or made records available for inspection may have to prove to a court that they didn't underpay somebody. Yeah, it's a minefield, and it can be really nasty. So, what are the practical realities arising out of today's conversation about purchasing a new business or thinking of selling yours? First and foremost, make sure you understand your employment law obligations to your staff or to any staff that you may inherit as a consequence, or decide to employ as a consequence of buying a business. Incredibly important. Now, a lot of business owners realize that the time and effort it would take them to get up that knowledge and expertise is prohibitive. They earn much better money doing what they do best, in which case, best thing you can do is get experts in to help you to make sure that you're meeting your obligations. The other thing that a practical reality takeaway from today is keep records and put everything in writing. If you have a thought, even if it's some ways off in the distance, that you might want the option to be able to sell your business at some point, if you haven't got all of your record keeping up to date, particularly today, as we've talked about it in terms of your staff, payroll and staff records, you're going to be in a really tight spot. So if we can help you work out what needs to be in place and get it in place for you, then let us know, because we can certainly do that. Check all of your employment contracts or your letters of offer. Make sure that you have appropriately worded agreements in place. And I mean beyond the lawful requirements. I mentioned earlier what the things are that you need to have in place in writing with a staff member by law, but we're talking about you having an employment contract that also has really good other clauses in it, like post-employment constraints, return of property, settling debts through termination pay, etc. All of those things are very important and need to be in a good, well-worded employment contract. Make sure that you have good, relevant policy on a whole range of different things. Deal with any performance or conduct issues now and do so lawfully, and to do so will minimize your risk, because the behavior you walk past is the behavior you accept. Make sure that you understand what your record keeping obligations are and that you're meeting them. If you need help with that, get in touch with us and we can help you. And as I said, have robust policy and procedure in place. And if you're not sure about anything that I've spoken about this morning or how it might impact your business, get in touch and get advice. There are so many instances of people in business who don't know what they don't know outside of their own areas of expertise. So please get in touch if that might be the key, if you think that might be the case for you in terms of your obligations to staff, your obligations as an employer, and your obligations under federal employment law. So that's it for today. Thank you so much for joining us. As always, it's a pleasure and a delight to have you with us. We really appreciate you joining us. To those who've come back and watched after the live stream, thank you so much for engaging with us again. If you've got any specific questions about your business or you want us to help you in any way, shape or form, contact us anytime. You can do so using Facebook, but also obviously via email, phone, website, any or all of those connection points you'll get us, and we'd be delighted to sit with you and talk through what your concerns or questions are. So please tune in again tomorrow. Join me again tomorrow. And invite your friends and colleagues. We would love to see you and interact with you. In the meantime, please hug the people that you can. Wave cheerily at those that you're still not allowed to. Stay safe, stay distant, wash your hands, and we'll really look forward to seeing you tomorrow. Thanks so much for joining us.